next speaker, Mr. Steve Corrin, comes with 20 years of experience in the investment distribution business in UK, Middle East, and Far East. He has spent last 12 years in Dubai. He was also instrumental in the early establishment of bank assurance industry in UAE. At Emirates NBD Asset Management, Steve looks after the sales of fund products to third-party distributors such as wealth managers, private banks, and institutional investors. He is a member of Life Insurance Association and the Chartered Institute of Securities and Investment. Ladies and gentlemen, to enlighten us about the wealth and prosperity of MENA region, please put your hands to welcome Steve Corrin. I would request our ex-com member, CA Jagan, to hand over bouquet to our speaker.
Can everyone hear me okay? Can you hear me at the back? Good. It's a long way back, isn't it? It's a nice big room. Good. Well, I'd like to say thank you, first of all, to Nexus Financial Services. I think they're one of the main sponsors for this evening. They've invited me here to speak this evening. My name is Steve Corrin. I work for Emirates NBD Asset Management in Dubai. We are a preferred investment partner of Nexus Financial Services. Before I start, is everybody here familiar with Emirates NBD? Has anyone not heard of Emirates NBD? That's a great start. Good. I've put together a short stack of 120 slides. Not really. I've only got about 10. I'll be fairly quick. What we're going to talk about is some of the opportunities in this region right now. The MENA region is going through quite a development, so I thought it was a good time to pick up on some of those themes. So what we'll talk about, I'm going to introduce you a little bit to the MENA region. We all live and work here, but it's good to know a little bit more about the region, about the economies. Then I'll talk about two of the funds that we use. One is a low-risk fixed income fund, and the second one is a more higher risk equity fund called the MENA Top Companies Fund. So let's have a quick look at the region. One of the mistakes a lot of people make is if we live in Bahrain or we live in Dubai or we live in Abu Dhabi, often we think that is the MENA region. It isn't. The MENA region is a big area. It's made up of 23 countries. It stretches right across from the Gulf, right across North Africa. It has a population of over 400 million people. Now, the interesting thing about that population is it makes the region twice the size of Russia and 3 times the size of Brazil. But 50% of that population is below the age of 35. Now, that's important. A young population is very important. A young population will be economically buoyant, economically active for many, many years. They will contribute to the building of schools, sewers, roads, infrastructure spending. It's always a good sign. What I particularly like is these 2 points. This region has pretty much all of the oil and all the gas. So as long as the world needs hydrocarbons, this part of the world will be wealthy. The markets that we particularly trade in right now are the GCC markets. Saudi, Qatar, UAE. That's our particular preferred area right now. Let's take a look at oil wealth. Oil wealth is what drives this particular region. So I'm going to ask you a question. Just going to see who's awake. I know it's a little late. I've got the graveyard shift. Everyone's hungry. Everyone wants to pop off and have a bite to eat. I'm going to keep you for another 10 minutes. So, oil price. There's 2 oil prices, Brent and WTI. Which one do we follow here in the Middle East? Very good. I heard a Brent in the corner. Very good. It was a 50-50. You couldn't get that one wrong, really, could you? Next question. Roughly speaking, what is the price of Brent oil today? 109. Someone's very fast over there. Good. It's 109, 110, 111. There or thereabouts. And it's been there for the last 3-4 years. Okay, which is pretty good. Now, at $110, the GCC earns about $1.8 billion a day in revenue. Okay, that's quite a lot of money. $1.8 billion a day. That's why they don't need to tax us very heavily. Okay? At $1.8 billion a day, somebody is earning or saving a lot of money. One country in this region is currently saving, at the end of every week, $1 billion. Any ideas who that might be? Very good. Very good. It is Saudi Arabia. $1 billion a week. Now, can you imagine a European country saving $1 billion a week? No. Can you imagine a European country borrowing $1 billion a week? It's a bit more like it, isn't it? Now, interestingly enough, I came to the Middle East first time was about 22 years ago, about 1993. And in 1993, I came to the Middle East, and the oil price wasn't 110. It was about, it wasn't 60. 40? Any more? 28? No, it wasn't 28. No, it wasn't 40. We had 40. Who said 30? No, it wasn't 30. No, it was 20. It was about $20, give or take. When I came in 93, it was about $20. And I remember the Middle East was wealthy then. Now it's 110. And it has been for the last 4 years. Just imagine the wealth that is being accrued by the governments here. So, oil is all very well being high, but then what happens with the governments? They've got to spend the money. This chart just talks about something called break-even prices. A lot of people have opinions on break-even prices. A break-even price means how high does the oil price have to be for a country to balance its budget? So revenue versus expenses. The interesting ones are pretty much Saudi is here, if my zapper works. Saudi, with an oil price of 110, their break-even's about 85. So they've got a decent cushion in there. Kuwait's got the biggest. They only spend about $45 of every barrel. So they've got a nice big cushion. They've got about $70 profit of every barrel of oil. The UAE is quite interesting because you'll see the UAE is the only one where the break-even is declining. Reason for that? Because quite simply in the UAE, the private sector is getting more and more vibrant in its economy. So it's reducing the costs as they go along. So the nice thing is all these countries are making nice profits. They've got nice cushions to spend on infrastructure and the underlying economies. That's how we're going to make some money. I mentioned before about the countries here saving money. Now, I'm just going to compare that to European countries because it's quite interesting. This chart just talks about the fiscal surpluses that are here. Right now, the countries in the Middle East have enjoy fiscal surpluses while lots of emerging markets are enjoying fiscal deficits, twin fiscal deficits. The horizontal chart, or the horizontal axis, talks about fiscal balance. So at the end of every year, is a country in profit or loss? Have they spent more than they earned, or have they saved more than they earned? The further along to the right you are, the more you've saved. You're in profit. So you want to be on the right-hand side. If at the end of the year, you haven't made profit, you've made a loss, so you've spent more than you've earned, how do you balance the books as a country? You borrow, exactly. So the vertical axis talks about how much does a country borrow at the end of every year. So the higher up the chart you go, the more you're borrowing as a percentage of GDP. So with those two issues, you don't want to be high up and you don't want to be left. You don't want to be in the northwest corner. You want to be in the southeast corner. And there's only, well, there's actually 4 countries down there now. There's Saudi, UAE, Qatar, and Russia. Can anyone think of anything that connects those 4 countries? All oil exporters. Most of these are oil importers. So it just underlines again the importance of oil and how important it is to this part of the world. What these countries are doing at the moment is using oil because they know at some point in the future the oil and the hydrocarbons will run out. I don't know if it's going to be 20 years, 50 years, or 100 years. Who knows? What the countries are using, they're using the money they're earning now to build the next economies for the next generations. So we're starting to see the benefit of that. We'll talk a bit about that in a couple of minutes. But the nice thing is, last year, the MENA markets were absolutely outstanding. The returns from the equity markets here were quite stunning. Anyone know what the best performing market in the world was last year? Who said Dubai? It wasn't. It was Venezuela. Venezuela did about 400%, but Dubai did 106. All of the MENA markets performed exceptionally well last year. This year, same story. Our MENA top companies fund is up over 17% so far this year, whereas emerging markets and world markets are pretty much flat. This part of the world is going through quite a renaissance. Quick look at how can you access these markets. It's important to see how you can access the markets. The one fund that we use is a low-risk fixed income fund. We borrow from some we lend to some very solid sovereign wealth funds, sovereign wealth-backed businesses, government-backed businesses. National Bank of Abu Dhabi, Mubadala is one of the big sovereign wealth funds. IPIC is a big sovereign wealth fund in Abu Dhabi. Top left, red and white flag. Anyone know where that flag is from? It's Abu Dhabi. AA rated, solid gold. They will lend us, we can lend them money at about 3.5%. Why wouldn't we buy those bonds? Qatar is the next one down. We can get about 3.5%, 4% from Qatar bonds. These are rock solid governments. We can get very, very good bond yields. We can put a bond fund together, which is very good credit quality and very good yields. To give you an idea, this is our MENA fixed income fund. We launched it about 4 years ago. It's averaged about 8.5% a year since we launched it. This year it's up about 5%. Last year it was fairly flat, but 2012 it did over 15%. The bond markets here are very good. Lots of companies, lots of banks are raising capital for the infrastructure spends. On the equity side, a bit more exciting. On the equity side, people buy equities for dividends. Interest rates at the moment are very low. Certainly in the UAE and Saudi, you're getting very low interest rates, sort of 1% if you're lucky. I think in Bahrain, you're maybe getting a bit more. But around the world, interest rates are low. So if you can get dividend yields of 4% from your equities, investors are pretty happy. And MENA provides very high yields right now. Here's some examples. SABIC. Everyone's familiar with SABIC, Saudi Basic Industries Corporation. They can give you 4.5% dividend. Now, if I could buy shares in SABIC, I would buy them and hold them until I die. SABIC's not going to go bust. They're never going to not pay a dividend. Why wouldn't I buy SABIC? The answer is I can't buy SABIC because I'm not a GCC national. Hold that thought. Coming down the list, you've got a telecom company, you've got the biggest bank in Saudi, you've got one of the biggest banks in Qatar, all giving you good dividend yields, 4 or 5%. Why would I invest in Saudi? Quite simply, Saudi is spending, in the next few years, over $900 billion on infrastructure. That's a big, big amount of money. $900 billion is a significant amount of money. They're doing it for two reasons. One, the country needs it. Secondly, they need to avoid an Arab Spring. It's as simple as that. Arab Spring happened in Egypt and North Africa because the people just didn't have enough. They were unhappy. So if Saudi spends $900 billion, they're spending it on housing, jobs, roads, infrastructure. They're putting money into the economy to keep the people happy, give everyone jobs, and it keeps the population in place. So $900 billion is a lot of money. We're buying banks, we're buying cement companies, we're buying construction companies, we're buying telecom companies. The telecom company in Saudi Arabia is very profitable, quite simply because the internet is one of the channels for the young population to access the rest of the world. Saudi Arabia is the world's largest users of Twitter and YouTube. Exactly. So quite amazing. We make quite a bit of money from mobilely. Qatar's spending $200 billion on infrastructure. They've got the World Cup coming in 6 years? 8 years, 2022. The World Cup is going to cost them about $10 billion. The world is coming to Qatar. So Qatar wants to look like a world-class city. They're spending the money to do it. They're going to build a metro. They're going to build roads, cities. They're going to make it look like a wealthy city. Qatar's GDP per capita right now is about $120,000 a head. US is about 30, 35. So Qatar wants to look like a $120,000 a head country. They're going to spend the money to do it. UAE, doing the same sort of thing. They're spending $200 billion. They're already well advanced in terms of their economy and how their city looks. But as you know, UAE won the rights for the Expo in 2020. The world is coming to Dubai in 2020. They want it to look good. Sheikh Mohammed has said, in 2020, the world is coming. I want all the construction finished. I want it to look good, tidy. I want everything working. So when the world comes, Dubai looks fantastic. And they're going to spend the money to do it. I take this presentation out to the Far East sometimes, and I asked a room of Singaporeans one day, I said, when you think of the Middle East, what do you think of? And I got the usual answers. Somebody said sand, somebody said oil, the usual sort of things. And a lady in the front, a Singaporean lady, put her hand up and she said, magic. And I said, magic? I don't understand. What do you mean magic? Do you mean magic carpets? I'm not quite with you. She said, no. She said, Dubai, when Dubai does something, it just does magic. And I thought, what a great perception. Now, whether it does magic or not, people in the Far East have a perception that the Middle East can do magic. So the PR machine is working. This chart, the picture in the top left is from a PR machine, the world's tallest tower. Underneath it, the world's largest shopping mall. In there, it's got the world's largest aquarium. Outside it, it's got the world's largest fountains. It's just bananas, but it works. It's all PR and marketing, and it works. Top right. Anyone tell me what that picture is in the top right? It's got policemen in it. It was in the UAE early part of last year. It was the launch of property, Emaar Properties launching their latest project about a year ago. And it was just evidence that the property market was back. The police had to come and keep the queues back. It was that busy. The bottom right looks like a Star Trek spaceship. Any clues what the bottom right picture is? It's almost a city. Not quite. It's not Expo. It's a shopping centre. It's a shopping centre being built in Yas Island in Abu Dhabi. It's right next to Ferrari World. You can see Ferrari World in the corner. They're building it in Abu Dhabi, and guess what? It's going to be bigger than the other one. The biggest shopping mall in the world. It's just the PR machine is going absolutely nuts at the moment. So there's 200 billion being spent in the UAE. There's 200 being spent in Qatar and 900 billion being spent in Saudi. That's $1.3 trillion on infrastructure. And most of it, if not all of it, is coming from cash. Quite incredible. So, in terms of equities, how have we done? Pretty well, actually. Last year we made 34% in our equity fund. This year we're up about 18% already. Equities in this part of the world are on fire. How far have they got to go? Well, I don't know. But here's our conclusion. We think there are a number of drivers in this region. One is the Expo. When I first heard about the Expo, I wasn't really that excited about it. Then I did some research. It's a joint bid from Abu Dhabi and Dubai together, so it's a UAE bid. It's a 6-month event, and it'll be held in 2020 in the winter. The number of tourists expected is 25 million tourists in a 6-month period. The population of the UAE is currently 8 million. So they're going to have to build about 50 medium to large size hotels every year between now and then. That's got to create some money. It's going to create 270,000 jobs. That's going to be quite a big thing. It puts the Middle East on the map. Following that, we've got the Qatar World Cup in 2022. We've got the MSCI upgrades. Everyone know about the MSCI upgrades? UAE and Qatar are being upgraded to MSCI emerging markets on the 2nd of June this year. It's a big deal. That means another $1.5 billion of international money comes into these markets in June. The world's spotlight comes back on these markets. And on the far right, Tadawul. Everyone familiar with Tadawul? The Saudi Stock Exchange. That's important. It's the biggest stock exchange in the region. It's the China of the Middle East. It's massive. Do you remember a few slides ago, I said SABIC? I'd love to buy SABIC, but I can't. In a few years, maybe in about a year or two, maybe I'll be able to. Saudi Arabia is going to open the Tadawul to foreign investors. Okay? It might take it a year or 2 years, but when it happens, that's going to be big. Because a lot of investors around the world want to get into this region, and Saudi is the big market. Right now, the only way for expatriate investors to access Saudi is through funds like ours. Okay, we've got 48% in Saudi, and one day when Saudi opens, we'll benefit from that uptick when it happens. So, in summary, this region is building for the future. We think the next few years are very strong for this region. In terms of emerging markets, we can't think of a region that's in better condition than this one. Fiscal surpluses, dollar peg, and governments that are committed to building their economies. So, that's about it from me. In terms of questions, I'm not here to take questions, because I think it's all time we had a bite to eat. So what I'll do, during the dinner, you can meet some of the Nexus guys. I'm sure they'll be happy to answer questions. As long as they're not awkward ones, we'll all be happy to help out. So thank you very much for listening, and enjoy your evening.
Request our past chairman, CA Shaukat, to hand over memento to our speaker.